gone short were forced to do the short covering. And so if you want to really to sell and buy trade, wait for such extended stop and then try to take the sell positions, you'll be safe. If you simply think that I'm taking a sell near that high during that of the trend reversal and also the first week of the month, then you might be vulnerably trapped. Probably you may have to wait for a few days in order to earn money from either way trading. So keep in mind that they could make the extended stop in the case of euro and followed by that extended upward stop in the case of GBP also during that of the election time frame. So they will simply create the rumor and then try to make the extended stop. And so last Friday, they simply recollect about that election. The election date were fixed long ago, but suddenly they recollected the election date last Friday and started making the slide. That's how whenever they want, they will recollect. Otherwise, they will simply discount it. So it is their prerogative, and they are the people who can talk about these news and not others. When they talk, others can also follow and use it. As far as the market reading is concerned, then 1.1177 is the low, 1.1201 is the high. They are simply consolidating between the high and the low. In the case of GBP also, they are not breached the low or the high. And USDN, they just breached the low. 120 has become the low. 120.25 is the high, which is not breached. So they just made a downward move. And slowly they are gaining, they are expected to gain and make one upward stop and then start making the slide. Always keep in mind, if you want to trade any of these currencies, try to take sell positions, not after the drop. Many of the traders as breakout trade going for the sell after the drop. So the players are here to trap such traders. Then in the case of CHF, 93.27 is the low, 93.41 is the high. They are not breached the low or the high. Only in the case of yen, they just breached the low. And in the case of Canadian dollar, 1.2155 is the low, 1.2181 is the high. They are not breached the low or the high. And Australian dollar, 78.03, 78.45, they are not breached the low or the high. So excepting yen, nowhere else, they just breached the highs or the lows. In the case of yen, they breached the low by 10 pips and still holding below that of the initial low. Still, the spread has not become more than 40 pips in order to initiate a trading excepting Australian dollar. So other currencies, you just watch, let them set the trend. Afterwards, you can take positions. So when they are trying to make extended upward stop, and you can take sell positions and still use the hedge order to limit the risk so that if they go against you, you will be able to see that the hedging is making profit and keep stop at entry in the hedging and then subsequently try to see that when the new high is not being breached for more than 30 minutes, close the hedge position with a profit and keep another hedge order 30 pips above. So once they start coming down, trail down the hedge order. If they hedge it again, then book profit on the hedge on the upside and then trail the hedge again on the downside until you are able to close the sell position with a profit. So it doesn't mean that you do not know whether the market is bullish or bearish. It is a question of capturing the profit on the either way moves of the market, because the market sentiment is not permanent. They create the sentiment and create the hypes, and then they try to simply change the sentiment or act against that of the traders once they commit the positions. So keep in mind that the players are here only to trap the traders by simply showing the levels. They don't gain anything. And only when the traders come for short covering, they will rise. A typical example is euro. And when the traders have turned long in GBP, because GBP was the currency leading last week initially. So everybody thought that it is better to go buy position in the case of GBP, and they are not gaining corresponding to that of euro. So you need to understand how to trade, how to track what currencies they are handling at the given time by looking into that of the net changes. Then you will be able to choose the appropriate currency for your trading. So this with regard to the trading strategy, note down the initial lows and the highs around 3:30 GMT. And if the market is near the high, you can take a sell. If it is near the low, not breach the low for more than 30 minutes, you can take a buy for a swing trade. And if you want to be a smart trader, wait for the extended stop either during the European session or the US session. And the extended stop can be during the data release, or they can simply create some rumors because it is an election time. So these are all the timings of the market. You can make a note of it. And early in the late sessions, they handle the majors, and the mid sessions, they handle the crosses. And during that of the gap time, they make the false move. If you track all those things following the time, we'll be able to predict what is going to be the move for the next session. So nobody else need to help you in that regard. So try to develop the confidence and try to make use of this strategy and see that you are able to take your own appropriate decisions so that you'll be able to stand with such decisions, and that will give you enormous moral strength. And once you have the self-confidence, then trading becomes a child's play. Okay, let me answer to the questions which are asked here. Where could one buy cable today? Oh, that's one more question. As I explained, that cable could make for the downward move. After making a high level the middle level consolidation, they could make one downwards and before making a rise. Players will be buying around 1.51, and then they will just firm up and book profit and make a drop, so that those who turn long will liquidate the long position at the lower level. Because just only the week has started just now, so they have to trap the traders. So after that only they will be able to accumulate lower level buys around 1.50. If you buy, it will be safe. Then Jen has got a question. Between now and Friday, the player look at the they could drop cable. That's what he means. Do you see it dropping to 1.50? No, it can just briefly touch the area of 1.50, and it is not expected to make a big drop. And see, if they want to go to 1.48, first of all, they have to create the bearish sentiment, not only in the cable. They have to create the US dollar sentiment. Only then all currencies will drop, then the cable can lead. So simply don't derive the levels without understanding how they are making the moves in the market. So they have just gained big levels in the case of euro, and after gaining the levels, they cannot simply create a bearish field in GBP alone. If they create bearish field in all currencies and US dollar gaining sentiment, if they create, then probably they can do that. So understand the type of moves they are doing in the market, then you will be able to find out how much they can drop or how much they can rise. And simply looking into the chart, if you think that, okay, there is the turnaround point last time, will they just go up to that? If you think, then that will create enormous uncertainty. See, 1.48, that was an extreme level they are shown in order to make a final downward stop in before making a rise. Okay, so such extreme levels, if they show, if somebody has taken a sell at 1.48 and simply wait, you will also book profit. So they don't allow it that way. So you have to understand the players are making moves in order to make profits. And how they can make profit? If they deprive the profit for the traders, only then they make the profit. Please understand the player's psychology. Then you will not simply ask such questions of whether they will go to 1.48 or 1.43 or 1.39 and things like that. Yeah, another question. Look like that euro trading zone is changed from 1.05 to 1.09, 1.09 to 1.414. Is it right to assume the next 4 to 8 weeks? See, they have just gained the levels in the case of euro GBP node, euro, mainly in order to handle euro GBP cross on the upside. And they are not expected to make further straight gain, and they will make one more downward move because at 1.12 they have sold it, so they have to buy it around 1.10 or 1.09 before making further rise. So if you keep that they are traders, then you will be able to find how they will make the moves in the market. But they have done the shift in trading zone nominally in the case of euro. And GBP is the virulent currency. They can just like that compensate all the losses in just one day move. And then it will continue to lead. I think Zensora has become so nervous. That is why he has repeated the questions 4-5 times in both the windows, chat window, and try to avoid becoming emotional, because that way, you will go in for some imaginations of that nature. Then Iqbal, how to deal with high impact news time? See, if you use the hedging order, then probably you can watch how they are making the false move before that of the data release or the prime data release time or the event time. And when they make the false move, you can just take the positions. If you're afraid of it and you don't have the hedging facility, then what you do is you just wait for them to set the new high and let the new high not cut for more than 30 minutes. Immediately take a sell position around that of the new high and keep 30 pips hedge order or a stop. And once the market comes in your favor, immediately keep stop at entry, so that one or two times you might be stopped out, but you might have a better sell levels. And when you get the highest level sell, when they make a drop, you will make all the profit on the downside move because they are making extended stop and moves. So extended stop and move, it can be for a quick upward move for 75 pips to 150 pips net change level. And then they try to make that drop straight away within the session or in the following session. So that you need to keep in mind, and during such extended stop and move, you'll be very, very safe. So if you think that it is a high impact news time, then you become afraid and nervous. Instead, you don't look into that of the news. You only look into that of the type of moves they are doing it in the market. You'll be able to decide appropriate trades. Then Sagat, do you think that it is the right time for position trading until August? No. And you have to wait till the mid of next week and then take positions. You'll be able to really make good profit. Yeah, I'll show the forecast page. There are some more questions. And Imad has got a question. Okay, can you re-explain the market timings again? The market timings say here 0030 to 7 GMT is the Japanese session, 7 to 7:30 is the gap time, and 7:30 to 13 GMT is the European session. You can call it as the session 1, session 2, session 3. The names are not important, but the timings are important. And in between, you find that the banks' deal rooms are not open to place bulk orders. So in such a situation, the players try to make some stop-ins on the upside or on the downside. So whatever way they make the stop-in, you can understand the opposite is going to be the move in the next session. So if they make an upward stop-in, that means they wanted to make a slide. If they make a downward stop-in during the gap time, you can understand they wanted to make a rise during the session. And after 20:30 GMT, up to 0030 of next day is a gap time. They make some whips or moves during that time. But the volume will be relatively less, and they will try to handle wherever the stops are close by. Okay, Jen. Did you see 1.5102 for today to buy? I did hear properly. No, I said that you have to look into that of the lows and the highs, what they are set. Okay, 1.5136 is the low. Okay, I gave that theoretically estimated level 1.50. That could be the low, intraday low in this particular week. So I never mentioned 1.5102 anywhere. My humble suggestion will be don't give importance to that of the levels. If you give too much importance to that of the levels, you fail to recognize the type of moves. And if you give importance to that of the levels, then automatically you tend to look into that of the chart, and then you find what is the bottommost level they are set. Probably you will think that, okay, in 2008 they set this low, or 2009 they set this low. So probably the market could go there. And you see, it is a question of imaginations. So if you continue to imagine, and the chart will try to support you, and it will just make you more afraid of the market. But you are not going to wait for an indefinite period with a buy or a sell positions. So when the market is around, say, these levels, so for example, 1.5150, 1.5165 is the high, 1.5136 is the low. Such a narrow swing of 19 pips is seen in the case of GBP. Now, after looking into it, if you see into that of the net change, 13 pips positive net change, how much they can make a move in the market? 150 pips on the upside or 150 pips on the downside in a given day. In the week beginning, the first day of the week, when the volume is low, the traders have to commit fresh the positions. So the traders will be looking for some upward move or a downward move. So what they immediately do is they look for the economic data release time in the calendars. So near that of the calendar timings, the market will try to show some quick moves. Till such time, they will be simply holding the market, because when the traders are not committing positions, there is no point in making big moves in the market. That is why you find that week beginning, it happens to be a very sluggish market. Today or tomorrow, then the traders tend to wait. Those who have taken the long position will pray to God that it will go up. It has to go up. And those who have taken the sell positions will envisage that it will come down. So in such a scenario, what happens? The players make alternatively the move on the upside or on the downside. And those who are afraid of the market moves, they have to invariably cut loss. And those who are not afraid of the market, they will patiently wait and capture the profit. That's what happens every week. So they have to now induce the traders to commit positions. For that, they have to make sluggish move only. And so some might commit positions by looking into the chart. Some might commit positions looking into that of the candlesticks. And especially when they find that there is a trigger points, like they go above that of the resistance and stay there, then immediately they will buy as a breakout trade. So they will create such scenario so that the traders can commit positions. So they will facilitate the traders or induce the traders to commit positions, afterwards trap it. That's why I always say that the players create the market sentiment and act against the traders when they commit the positions. And the players are not here to give profit to any trader. They wanted to trap either side of the traders. And we have to be smart enough and trade along with them. When they make an extended upward stop and sell, when they make an extended downward stop and without developing bearish field, buy. Technically look into that of the low which has not been breached for 30 minutes to 2 hours, so that you can buy near the low. You will be able to see a definite profit. So market rewards patience, not impulsiveness. So instead of committing a position, you see many people commit the position and then ask so many people whether the market will go up or come down. Before committing the position, they fail to ask anybody. If the going is good, they don't ask anybody. If the going happens to be adverse, then they will start asking 10 to 15 analysts and find out what is their view, because they do not want to incur loss. My humble suggestion will be, don't do that. Instead, you wait patiently for a good opportunity in the market, and they will continue to give trading opportunity. And whenever the spread becomes more than 40 pips between the high and the low, and also they start making quick moves and then try to commit positions, we'll be able to really make profit, and the market rewards patience. Use the hedging order to limit the risk, so that in the event if the market hedge you, you'll be able to book profit in the hedge, and then subsequently you can also book profit in the original sell positions. This week they are expected to make the firm up move with the upward stop, and till that of Wednesday and Thursday and Friday they are expected to make the drop. Then what is your opinion on DAX and FTSE? Okay, as far as the stock markets are concerned, they are expected to make the slow profit booking moves. Okay, no more questions? So as I explained that, try to do the swing trades within the session, and probably Wednesday when they firm up, you can take the sell positions, and afterwards Thursday and Friday they will drop. So anyhow, I will come on Thursday and review the market for you and see whether the market has moved in our favor or as per that of the forecast or against, so that you will be able to understand how exactly the forecast can be used, and that can be fine-tuned using the market reading technique. So the market reading technique, you have to do it on your own on a daily basis, so that you need not ask anybody to help you, and you become your master in understanding the market. And once you develop your own insight of the market, then you find you are really able to wait for good opportunities in the market to take positions and capture the profit and continue to earn from that other market. Even though many people say that 95% of the traders lose money in the market, all over the world, you find as long as we are human, the fear and the greed or the emotional status is almost similar. And that is why you find in different parts of the world, people continue to lose. If you conquer that, and that means it's not that you become a saint, you have to understand there is no necessity to become emotional. If you understand, there is no necessity to become emotional, because we become emotional only when the market gives a surprise for you. You expect the unexpected, then there won't be any surprise in the market. Automatically, you find that you are able to control your emotions and start earning money from that other market. So I take this opportunity to thank FX Trade for the facilities provided to present the webinar, and also you people who have come here to listen to my webinar. And if you got any doubt, you can ask questions through fxtrade.net. When the webinar recording is being posted, I'll be willing to answer those questions. So wish you all the best in your trades. See you on Thursday.